Hello and welcome back to today's morning report on Monday the 20th of April with me, Rich Perry, market analyst at Hantech Markets. I'm going to move on to dollar yen now, and dollar yen is in an interesting position now because it's coming back towards a test of this key support at 1830. We're actually into what is now a seventh bearish candle in a row, which is interesting in itself, but you would also argue I don't think the candles are that bearish, certainly not in the last couple of days. They're more sort of, that's almost a doji, and that's sort of like a spinning top, which both of which are fairly sort of neutral-ish to, I mean, obviously they are red candles, so they're slightly bearish, but I think it's just suggestive that perhaps the selling pressure isn't so great. I mean, even the momentum indicators, which have deteriorated, yes. RSI is now back at 40. The recent lows of March, which is that 118.30 low, that low came in around this sort of level, around the 40 level, and also the one in early April as well. So it's sort of getting to the stage at which, yes, if that support holds, then it's probably going to just see a continuation of this range, this trading phase, this sideways move that we're seeing. But I suppose obviously the MACD lines are now turning negative, stochastics into more negative territory. So there is still a bearish bias to the chart in this very near term sort of trading phase. But this is the hourly chart, and you see this sequence of lower highs and lower lows continuing. You're actually now underneath the 119.40 pivot level, and we're finding resistance underneath that. So that continues, the low in the last few minutes was 1850, so it's just above that key. Actually, keep going. There you go. That key low of 118.30 that we have in place there. So you've still got this phase, but I'm still hazarding that it's slightly slowing, but maybe I'm just looking at that with a certain amount of rose-tinted glasses, because I still think this is going to be a continuation of the range. But you've certainly taken on a more negative configuration in the MACD lines, consistently now on the hourly chart below zero. But there is still, you could also then argue, a slight bullish divergence also with the lows. You've got higher highs. Sorry, that's just completely not worked at all, annoyingly. So you got the the lower highs and lower lows on the price, and then the MACD lines have got a slightly sequence of higher highs. So that's a slight bullish divergence. And also you can see it very slightly on the RSI, nothing too significant though. But I'm not 100% convinced that this support at 118.30 is going to decisively broken. I think it's going to be, it could come under pressure and potentially hold. I'm not calling a breakdown certainly yet. There's going to have to be quite a lot, I think, to happen to dollar yen to suggest it's going to be breaking sharply lower. And for the moment, I'm still confident of playing this sort of near-term range that we've still got dollar yen trading in. So I wish you good luck in your trading in dollar yen today, and I will speak to you later. Thank you.